The corporate tax policy and administration in India face several challenges and opportunities for improvement. One of the challenges is the complexity and multiplicity of tax rates and exemptions. India has different tax rates for domestic and foreign companies, depending on their turnover, income, and sector. Moreover, there are various tax incentives and deductions available to companies, which reduce the effective tax rate and create distortions in the tax system. For example, a domestic company can opt for a reduced tax rate of 22% or 15%, but only if it does not claim certain tax benefits or set off losses. This reduces the tax base and revenue potential of the corporate tax. Another challenge is the lack of data analytics and transparency in the tax administration. India does not have a comprehensive database of corporate taxpayers, which makes it difficult to monitor compliance and enforce tax laws. The tax authorities also lack adequate tools and skills to analyze the data and detect tax evasion and avoidance. Moreover, there is no clear mechanism for sharing information and coordinating between different tax agencies, such as the Income Tax Department, the Goods and Services Tax (GST) Department, and the Customs Department. This leads to duplication of efforts and inefficiencies in the tax administration. A third challenge is the high cost of compliance and litigation for corporate taxpayers. India has a complex and lengthy process for filing tax returns, paying taxes, and obtaining refunds. According to the World Bank's Doing Business 2020 report, India ranks 115th out of 190 countries in terms of ease of paying taxes. The report estimates that it takes an average of 250 hours per year for a medium-sized company to comply with its tax obligations in India. Moreover, India has a large backlog of pending tax disputes, which creates uncertainty and risk for corporate taxpayers. As per the Economic Survey 2019-20, there were about 4.8 lakh direct tax cases pending at various appellate forums as on March 31, 2019, involving a disputed amount of about 9.32 Indian rupees lakh crore. To overcome these challenges, India needs to reform its corporate tax policy and administration in several ways. One of the opportunities is to reduce exemptions and rationalize tax rates. India should phase out or limit the tax incentives and deductions that create distortions and loopholes in the tax system. Instead, India should adopt a uniform and moderate tax rate for all corporate taxpayers, regardless of their size, sector, or origin. This would simplify the tax system, broaden the tax base, enhance revenue collection, and improve competitiveness. Another opportunity is to enhance data analytics and ensure transparency in the tax administration. India should develop a comprehensive database of corporate taxpayers, using information from various sources such as income tax returns, GST returns, customs declarations, annual reports, etc. The database should be updated regularly and accessible to all relevant tax authorities. India should also invest in advanced tools and skills to analyze the data and identify potential cases of tax evasion and avoidance. Moreover, India should establish a mechanism for sharing information and coordinating between different tax agencies to avoid duplication and improve efficiency. A third opportunity is to reduce the cost of compliance and litigation for corporate taxpayers. India should simplify and streamline the process for filing tax returns, paying taxes, and obtaining refunds. India should also introduce online platforms and digital services to facilitate interaction between taxpayers and tax authorities. Furthermore, India should expedite the resolution of pending tax disputes by strengthening the judicial capacity, promoting alternative dispute resolution mechanisms, such as mediation or arbitration, and implementing reforms such as faceless assessment and appeal. By addressing these challenges and opportunities, India can improve its corporate tax policy and administration, which would benefit both the government and the corporate sector.